Welcome to Trading Lounge and the SP 500 for the 29th of November. Starting on the daily chart here, we've been counting up here in terms of 1 and 2 here, and then from 2 to 3 here, with 5 waves here of 1 and 2 and 3 and 4 and wave 5 here. So we're interested in this last leg here, obviously. Once this does tap out here, then we can expect the market to move back to the wave 4 of 1 lesser degree here. So back into the 3100 area here before we see any further upside. So we can see that wave 3 here has got the extension in it. So that normally means that wave 1 here and wave 5 will be roughly the same. Still looking a little bit short at this point, but let's go in and have a look at it. Picking it up on the blue wave 4 here, we're looking up in here on the 4-hour chart for 5 waves in this sequence here. So let's continue to break that down. So picking it up here on the hourly chart here with blue wave 4 here. Now we've got 2 possible counts here, and I want to explain them clearly. So taking this first one here as wave 4 low here, based on this one here, we would have 1 and 2 here, and then all the way up for 3 here and 4 here, and then going up for 5 here, and that would be the top playing out here. Now, if we took this from this low down here, that would give us an extra wave where that wave B is. It would give us an extra wave 1 here and 2 here, and then it would make this one wave 3 here and wave 4. So I will just go to a 15-minute chart here and take a closer look at this here. So in this case here, we would use this is the blue wave 4 low here. So let's just put that in here for a moment. Also look at the cash market for this as well. So this is where I've got this from the cash market. So I want to explain this here for the cash market, but in a nutshell, 1 and 2 here, and then all the way up for 3 here, an A and a B and a C here for wave 4, pulling back to wave 4 of 1 lesser degree, or the 38.2% retracement level, which would come in around here, so just above the 3130. So we need to be mindful of that. So it's possible, well, anything's possible. The question is that we need to also look at, and we will in a moment, copy that, to see if this wave 4 is actually sitting in at this space here, and we continue to go to the upside here. If we continue to go to the upside here, I'll explain where we can go long within all of this. But this particular count that I've got here, I've taken from the cash market. So when we look at this 5-minute chart here on the cash market here, it's just a little bit clearer in terms of we've come down here as a corrective wave, and then we've got wave 1 here, nice 5-wave structure here if you've got an eye for Elliott, and a little ABC for wave 2 here, then 1 and 2 and 3 and 4 and 5 here, and overlapping of 4 and 1, so it kind of does give it a bit of a hard time in that regard. But then wave 1 and 2 here, 1, 2, 3, 4, 5, nice and clear here for wave 3, wave 4, and then coming up for wave 5 here of wave 3, so that wave 3 can sit on top of that wave 5, and then we'd still need wave 4 to come into play here. So I've taken that count from the cash market. It just doesn't look that great on the futures market. So we're tracking 2 counts. So coming back to this scenario here, we've got, it's possible that we can come down here for wave 4 and then move up to wave 5 here. So we need to be mindful of that. Yes, we will look to go short under these here, but I'll explain those as well here. But they may only get us to here. But it's also possible, if that other count is correct and wave 5 is on the top here, that will be pulling back to the 3100, the wave 4 of 1 lesser degree here. So I think it's worth building in some sort of short trade here. There will be risk on that, but we wouldn't want to get way down here and then, start to move, because it will be a bumpy ride coming into this group 1. This is a minor level here, and these are sub-levels. So 100 is a minor level, then we go up to 200, that will be the next minor level, and then we have the sub-levels in between those. So sub-levels are Fibonacci numbers 1, 2, 3, and 5, and then 8. But with 8 here, we've also got 72 and 65 that make up group 2. So 1, 2, 3 make up group 1, the 5 makes up what we call the midpoint, and then group 2 here. So that's enough about that. So let's just go back to the hourly chart here for a moment and then go into the tick chart here. So in this case here, if this is wave 4 here, we've got 1 and 2 and 3 and 4 and 5 sitting here, then in a nutshell we should be able to look to short this under these lows here. At the same time though, if we go to the tick chart here, this will be 100 ticks. So we've counted all the way up. I'll just go into 1 week here, give us a bit more data. So from here, from wave 4 here, we've got 1 and 2 and 3 and 4. We've counted all our little waves to the upside here for that. And even the last little bit here, we've taken percentage here. So yeah, I mean, this counts quite nicely as a top being in play here for 5 of 5 of 5 of 5 of 3. So we can drop down from here. So the question is from this high here, do we have 5 waves in here? It's a little bit, there's not much definition in that, so it's a little bit hard to see on the 100 ticks. So we could go and have a look at 20 ticks, which I'll do in a minute. We'll see if we can figure that out. But if there was a move coming up through here, I just want to talk about this for a moment. Just label these here. So if we were going to label this here, coming to the upside here, we'd need to look at this as the A wave here, then an A and a B and a C for the B wave here, and then we need to count 5 waves up here. So it's probably likely 1 and 2 in here, and 3 to here, and 4 to here, and then wave 5 going up. So wave 5 would probably be 1 and 2 into here, and then there's 5 little waves, 1, 2, 3, 4, 5 for the third wave, fourth wave. So one more little high in here to have that little ABC pattern, which would be a bit higher than the 61.8% here. I'll just double check that. Yeah, it is. Yeah, so just a tad higher. So, but it's okay. It's not the end of the world. So we've got one more little push up there. So what we can do, this 50 here, the midpoint 50 is important. So what we could do is we could also break this down into micro levels. So from 50 here, we would have 1, 2, and 3 here, and then we would have 5 here. So I'm just looking to the upside now. So we know with group 1, when we're working with group 1, which is number 3 here, if that becomes the support, then the market will forget about the closest largest number, the midpoint here, and head up to number 5 here, and 5 being the second strongest number will pull it up. So if it pulls it up to here, then double tops are not the end of the bull campaign, so that means it will be going higher. So if we get support on top, this is plan B, if we get support on top of 31.53 as a retested support, as a tested support, then you can look to go long from that point. So if I could just drag that, copy that up here into this point here. We know that the US are only open half of the day today, Thanksgiving and all that. So, but just pointing out that that's the point that we would be wrong at this point. Otherwise, we can look for the short trade. So the short trade would be, well, we could also just look for a breach of this trend line 2 here, I guess, if you wanted to get a little bit closer to the market in that regard. So it's a bit of a yucky green. It's a bit better. So you can move in a little bit closer at this point, but in a nutshell, you want that, you really want the 50 here to become the retested resistance. So on the short side, if the market comes back down, there'll be a little bounce off it and it'll move through here, come back and retest it, and then that's your set your order up to buy on stop, sell on stop here, and then it'll be down from that point. So that's I mean, if I was doing it, that's what I would do here. I wouldn't really worry too much about the trend line, but I'm just going to remove that. So on the short side, if it moves up here and then moves back down here, we've got two scenarios, okay? So scenario one is that we could come down for the A wave, the B wave, and the C wave coming back down here. The C wave will be, if I could just copy this for a moment. The thing with the A waves too, in corrections, they're always quite frightening because they're normally taking out stops. They'll just trigger all the stops and they move quite quickly. So, but in a correction, I can draw over this side so the market comes up. Wave A is normally the sharpest, and then wave B, and then wave C is on a bit more of an angle. So if you see wave C on an angle here, then you know that we're more than likely got this ABC pattern here. But if this move down here, this C wave is rather sharp, it's sort of equal to this one here, then you know that we're going into a bigger picture, a bigger decline to the downside. And wave A and wave C will have some sort of equality to it as well. So just be mindful of that, be about the same sort of length. So we need to work out, I mean, wave A in a wave 4 correction can be in 3 waves or 5 waves. So let's just go in here, and we probably won't be able to figure this out, but we'll just have a look. It looks a bit sharp, so just want to focus in on this little area through here. So we know that that's the top just here on this one rather than this one, which is important because otherwise this would be down for 1 here. But because that's just off the high here, so I'll take that on board as being that. So from here we could go 1 and 2 and 3 and 4 and 5 to here, and then that would be like wave 1 here and wave 2. So then we've got 1 and 2 and 1 and 2 and 3, 4 and 5. So that's all 1 to here. 1 and 2 and 1 and 2, so that brings that down. So that's 1 and 2 and 3 to here. So that makes a nice wave 4 here, and then we've got a dodgy wave 5 here, which is 1 and 2 and 3 and 4 and 5 here. Dodgy because it's overlapping somewhat. So it does appear that it's splitting hairs a little bit, and you can throw tomatoes, but it does appear to be impulsive. But I've been caught out like that before. It's not clear. That's the point. Okay, I mean, if it's clear, it's clear. If it's not, it's not. Yeah, it could be construed as an impulse wave. So that does open the door a little bit. It means that we're not in a flat correction. So just going back over this, we know that on the number 3 up here, the number 3. 3,153. If that becomes the support, then the market's going to go higher from that point. Let's go back to, I'm just going to remove that. 100 ticks. So yeah, so if support becomes on the 53 here, the 13153, then we're going higher from that point. That takes care of that. To the upside, on the downside, the first trade that you can put in is if this becomes if the 50, the midpoint becomes the retested resistance, and you can also build in trades down here as well. It's possible that the alternative count that we've got will just give us an A wave, a B wave, and a C wave down just below the 40 area through here. And the way that you can tell that it's a wave C is because it will be on more of an angle than wave A here. If it comes down just as sharp or nearly as sharp as wave A here, then it means that we can open it up into the bigger picture, which will drop further down into 3,100 area through here. The wave 4 of 1 lesser degree at this point. And if you do go long from through up here, then group 2 is the next target here. Alrighty, thanks for tuning in and enjoy the weekend. Cheers.